Gold spent weeks moving sideways, frustrating buyers, frustrating sellers, and trapping traders on both sides. But now something has changed. Look at this weekly candle. Gold has just pushed from around 4000 area to above 4300 in a powerful move. So the question for this week is not simply will gold go up or down. The real question is, was this breakout we have been waiting for? Or is gold about to make late buyers pay for chasing the move? Let's build a story from the weekly chart all the way down to the 4-hour chart. Let's start from the weekly chart because this is where the bigger story becomes obvious. Gold spent several months falling from the March high. We then saw the market gradually lose momentum on the downside. And notice what happened around the area 4000. The area from 4000 to 4050 repeatedly attracted the buyers, and this week gold did not just bounce from it. Gold attacked the upside with force. From 4320 to 4350 area is now the first area I care about, because once resistance breaks I don't automatically buy. I want to know whether the price can actually hold above it. And here's where this gets interesting. Gold is now approaching a much bigger obstacle, around 4400 to 4450. We are entering an area where I would expect sellers to at least show up. If gold reaches that zone, after already running more than $300 from the recent lows, I don't want to be the trader blindly buying because the candle looks beautiful. I want confirmation, because there are two very different stories gold can tell us from here. Now let's drop down to the daily chart, and this is where the move becomes much more interesting. Look at the acceleration. Gold did not grind higher candles by candle. It started expanding. That tells us buyers have suddenly become aggressive. For me, this 4300 to 4320 is the first area to watch on a pullback. Below that, we have this area which is 4220 to 4250. And if the correction becomes deeper, this 4140 to 4170 becomes an important structural area. So remember these three numbers. These are not three random support lines. They are the areas where I want to see how buyers react. Now let's forget the weekly chart for a moment. If you are actually trading gold during the week, this is the chart you need to watch. Look at what happened. Gold broke through the previous consolidation area, pushed aggressively higher, and is now sitting around 4340. This 4320 to 4340 is the first decision zone. If gold pushed back deeper, this 4240 to 4260 becomes much more interesting. And below that, this 4190 to 4210 area. And finally, 4140 to 4170 is the deepest structural support. Now here's how I'm thinking about the week. If gold pulls back into the area of 4320 to 4340, holds it, and gives us bullish confirmation on a 4-hour chart, I would then watch for another attempt toward. And if this area of 4400 to 4450 zone finally breaks with acceptance above it, then 4650 to 4700 becomes the next major upside area I'm watching. But there is another side of the story. If gold fails to hold 4320 area, I would not immediately call it a collapse. I would watch 4220 to 4250 area next. If even that fails, the market can start rotating toward 4140 to 4170 area. Now the news that can change everything in the coming week. And normally gold is where technical analysis would be enough, but not this week, because gold is walking directly into an inflation data minefield. Wednesday is the biggest one, US CPI. If inflation comes hotter than expected, markets can push treasury yields and the dollar higher, potentially creating pressure on gold. But if inflation comes softer, the market can start thinking about a less restrictive Fed path, and that's where gold can get another wave of buying. Then Thursday gives us another inflation check, PPI, and initial jobless claims arrives at the same time. So this is just one data point. The market gets another look at inflation pressure and the labor market. And Friday brings us the US consumer into the story. Retail sales. If the American consumers is showing strength, that can support the dollar and yields. If spending disappoints, traders may start questioning the strength of the economy. And there is one more piece of the puzzle. The Fed just kept rates at 3.50 to 3.75% at its July meeting. But here is the interesting part. Three FOMC members disagreed because they wanted a 25 basic point hike. So the market is now trying to ask one question: is inflation going to force the Fed to stay restrictive, or is the weakening labor market going to pull policy in the other direction? And gold sits right in the middle of that battle. So here's my game plan. If 4320 to 4340 holds, then the next expected target will be 4400, then 4450, and probably 4650. I will wait for the confirmation first. And if 4320 fails to hold, then the next expected target would be 4220, 4250, and most probably 4240. If the entire bullish breakout structure starts falling, then the bearish scenario becomes much more interesting. These are zones, not guaranteed reversal points. The reaction inside the zone is much more important than the number itself. So if I had to describe gold's story in one sentence this week, the seller controlled the market for months, but now the buyers has finally taken the microphone. The question is whether buyers can keep control after the first major resistance. 4320 to 4340 is where I want to see whether this breakout can breathe. 4400 to 4450 is where I expect the next serious battle. And below this 4220 and 4140 remain the levels that could tell us whether this is a healthy correction or something more serious. And if you want to see how this story develops, stay with me. I post daily gold updates on our short feeds, and I also go live every Tuesday and Thursday. Subscribe to my channel now and let's see which side of gold wins this week.